Welcome to Grow My Business or Sell It, the podcast that helps entrepreneurs in 3 ways: how to grow your business in the most cost-effective way, how to sell it for as much money as possible, and how to invest the proceeds of all that hard work. Whichever stage you're at, listen up, because I guarantee you'll take something valuable from every episode. Welcome back to Grow My Business or Sell It with me, Graham Rowan. Now, my guest today is a former RAF pilot who's packed an awful lot into his young life. He's now a full-time investor and trader in the financial markets, as well as owning a portfolio of other businesses. What's especially relevant for us is that he's built his main business, coaching people in financial trading, through organic growth, while also using M&A techniques to acquire a portfolio of other businesses alongside it. His name is Siam Kidd. Siam, welcome to the show.
Hey, Graham. Thanks for having me.
Well, this could be a bit of a challenge, given everything you've done, but can you give us a kind of 3-minute summary of your business journey so far and how you've got to where you are today?
Yeah, 3 minutes. It's going to be tough. So very quickly, I've been trading from the age of 18, so alongside my sort of military career. And I eventually left the Air Force prematurely to try and become a full-time trader, and then quickly ended up on my arse. Some silly trades, blew through everything, ended up no life savings and in debt. And it was annoying because I eventually, despite that silly move, I was actually a good trader. And after that era, I did get better. But, I started making good returns, but in percentage wise, but I think all I could rustle up was like a £1,000 trading account. And so if you're making like 10, 20% a year, it's absolutely nothing. So I was trying to find a way how to get more money. And then I thought, okay, business. If you look at any billionaire on the planet that doesn't have a daddy trust fund, they've made their wealth through business. So I thought, cool. And, rich dad, poor dad helped with that sort of face slap, realization. And then I just went full head first into business, and it took about 4 businesses to get going. I've done so many different things. It's ridiculous trying to find something that works, everything from a private jet and helicopter company to Zocca UK, which was the UK's first bubble football company, there's so many things. But yeah, much sort of took off. And then I guess eventually around sort of 2013, by then I had 3 years of getting into business, and I managed to get my trading back in order. So I managed to get a 50 grand loan, I don't know, 2011, 2012, whatever. And I'd grown that to about 100, 150K pretty quickly. So I was sitting pretty on the trading, and then I set up the Realistic Trader, just to teach, how not to trade, all of the errors. And that just grew organically because, trading is very lonely, and it's always good to have a community around you. I then grew that business. Now, so here's the crazy thing. The biggest accelerator in business I found was through Facebook ads. I got good, like trading and Facebook marketing are so similar. It's ridiculous because you become a data whore, geek. And so I was just, and I applied myself to Facebook marketing, and it was a treat. And so, back in the day, not now, you could get, for every £1 of ad spend you put in, you could get, £5 or £10 back within a month or two. And then you just do, rinse and repeat. And that is like, then I discovered the velocity of ad spend. And so, if you can turn £1 into £2, let's say, in the space of a month, and then you take that £1 back and put it back in marketing again, or you have an ad velocity of 12. So you could use that same pound 12 times in the same year. So if you had a 10K ad spend budget, actually throughout the year, it's 120K ad spend. And so I actually made some pretty hairy moves there. So there was once I had a campaign which did, it was going well. And I've always had the mantra of, always put your money where your mouth is. I will always bet on myself. So I took out, I think, 100 grand loan or something, 100 or 150 grand loan, and I put it all into Facebook. That 100 grand or something turned quickly into about 3 or 400K, paid back the loan. Then I was like, cool. Quickly lost about 50K because I got a bit too exuberant. But then like a year later, found another good campaign. And then I put like probably 300 grand in that. And that turned into just shy of $1 million. And I was like, oh, cool. So actually, most of the growth business growth has come from Facebook. But moving into M&A stuff, I got into M&A about 2014, 2015, and then proceeded to be the world's worst M&A practitioner. I entered it far too early in my business career because I think I was slightly, definitely naive and a bit too big for my breeches, if that makes sense. Because I had RT doing well, and I had some other businesses, I can't remember, which are doing okay. They're doing about 10, 20 grand a month profit. But the problem was, it was a spinning plate that I needed to spin. And so there was me, I had a fair amount of money, and I basically bought any business with a pulse. And then before you know it, I bought, I think in the space of like from 2015 to 2018, I bought something stupid like 16 businesses in that space, most of them in an 18-month period. And then literally up until 2022, where we are right now, I've only just got out of business indigestion. It's taken me a good 7 years to basically recover from the mess I made because, I was basically spinning like 15 plates at one point. And then last year and this year has been me taking a big samurai sword to the group and killing, selling, liquidating everything, to the point I've got 3 businesses now. One of the businesses I don't even do anything with. It just ticks over. And then the other business, so the realistic trader, I don't do anything really. So I have a team that deal with everything, and all I do, I just trade. That's all I do. I sit in my underwear, in my t-shirt, like I am right now with you, Graham, just trading.
Thankfully we're not on video. This is audio only, Siam. But wow, so much to unpack there, and thanks for getting all of that into a few minutes. But if we just take you back to a realistic trader, I think the motivation there was that there was all these kind of online charlatans saying, get rich quick, you can be a millionaire tomorrow, and you wanted to take a more kind of ethical approach to that now, and you're very upfront on the site that this is it's a business, not a hobby, and B, you should take a 5 to 10 year view. So I would imagine that must put as many people off as it does actually attract you. So how have you kind of built that kind of ethical approach into the way you operate Realistic Trader?
Well, I actually treat RT not like a proper business, actually. So what you see on the website is like the first filter. Bad customers just waste your time, and a bad customer will end up, you'll just be giving a refund to that person anyway. So I'd much rather put as many people off as possible, and also attract people that sort of resonate with me, because I say some crass things sometimes, and I don't sugarcoat anything I say. I'm straight. I will always speak my mind. I tell things as I see it, and I rub a lot of people up the wrong way. And so if someone is very weak or easily offended, I'm not very PC, they can bugger off. I don't want them in my business. I don't want them in my trading community. So one of the last filters is like, this is literally just a trading community. Time will, and so take it or leave it. And so the awesome legends in the community now are really, really great people. And that's why the average, like with RT, you either leave at the end of year 1, which isn't a very small percentage, or they stay for 3 to 5 years.
Yeah, and you seem to build a really deep relationship with them. I'm intrigued really as to what lessons other business owners could take from how you've managed to build and nurture those deep relationships.
Just got to tell the truth and lift up your skirt for everything. So like one of I still think it's a cool thing. It's not very novel these days, but it was when I started it. But every single trade I take in real time, I place it, and then I text it out onto our private Telegram channel. So I take a screenshot of the actual chart where I entered, and with a stop loss, and where I'm aiming for it to go, and then I take a screenshot of the actual trading terminal so they can see all the bits and bobs, and I text everything out so people see me live and die by my own sword. And and so yeah, they see all the ups and downs. And I think the real learning points is, when I do get clobbered for 6, it's you don't I guess a market dabbler would cry and never bounce back. So for example, in January, there was a there was a period where I made a silly move. I should have I couldn't see it coming, but I had about $3 million of a certain crypto, and then there's one night the treasury manager of that crypto was outed in a leaked document that he was a convicted felon, like he was a fraudster. And then literally the crypto halved in about 15 minutes. And I was watching Netflix with my wife. I was watching Witcher at the time. I checked my phone. I was like, I'm $1.5 million down.
Ouch.
Okay, well, let's just keep on watching Witcher. And that I knew full well that, every dabbler out there would have seen that massive devil candle. It was a massive red candle, and gone, oh my God, let's sell. And then panic sell. You never, ever, ever want to sell on a big red bar, and vice versa. You never want to buy at the end of a big blue or green bar. So I knew there will be the inevitable relief rally or pullback. And there was, and in the end, I pulled out with only, I think, $650K loss. But then I recovered it. But the thing is, with trading, revenge is best served cold. So you take your revenge, not on that market and not at that time. So you basically sit on the sidelines and wait for the next opportunity, like nothing's happened, and just carry on. Don't change. Don't try and win it back straight away. So, but yeah, obviously this is a business podcast, not a trading thing. So, and also with another thing is in terms of sticky customers. That's not the best term because I'm actually friends with all my clients. We twice a year we have, every 4 months we have a massive like event. A 1-day event where it's a whole day of learning and speaking, no selling from 10 till 6. And then at nighttime, it's party. I normally spend about 20 grand just on the party. And we have amusements and arcades and booze and food. And so you get to party with everyone every quarter. Every winter we go skiing, and then every summer we have this, a hot holiday.
So is there a kind of optimum size for this kind of community, or do you see it as something that could be infinitely scalable?
I don't think. Well, it could be scaled, but then a lot of the essence is lost. So at the moment, because it's just me on my Todd trading, and I've got I guess it's my following. We've only got 450 traders. I guess if it got to about 1,000, that would probably be a sweet spot. But if I ever, and I don't actually want to scale the realistic trader. I used to have plans of scaling, but then you have to remove yourself completely. And because at the moment I'm the single point of failure. If I stop trading, RT dies basically. So if I were to make this resilient and whatnot, then I'd have to replace myself as traders. I'd have to then split everything up by regions and stuff like that. And you can do it. And there's huge trading organizations out there. We both know. I'm not going to say the names, but do they have any life essence or soul? No. Do they have any client loyalty? No, because we have endless amounts of people joining us from those fake companies saying, "Oh my God, I've been upsold to the maximum here, and I've learned nothing. I still can't trade."
Yeah.
Anyway.
Yeah. So I guess with the nature of that kind of business, on the one hand, the positive is you've got a very predictable, recurring monthly income from it. On the other hand, you're so intrinsic to it; it's hard to imagine there being a viable exit strategy as to somebody else suddenly becoming the realistic trader. Would you agree with that?
Yeah, this is just a boutique lifestyle business that just tinkles away. Like it's not one of my growth businesses. Yeah. So I've always been of the opinion you should have. Well, I've always had 3 groups basically. So you should have a lifestyle boutique group let's say you're only going to have 3 businesses. Okay, one would be a lifestyle boutique business that just pays your bills, keeps you happy, and a nice profit buffer. You then should have a growth business, so something which you are aiming to sell for shitloads, or have, go ballistic. And then also an enabler group, so something which I can help you in business. So in fact, it's not really 3 companies, it's definitely 3 groups. So for example, I look at I'm a big fan of first principle thinking and whatnot, and I'm one of the weirdos out there that actually believes I think I will be digitally immortal. So when you look at the rate of tech progression, especially with neural nets and brain-machine interfaces, like Elon's Neuralink and stuff like that, in our lifetime, literally, if you look, the tech singularity or the AGI singularity is soon approaching, whether it's 2030 or 2050. But before we get anywhere near AGI, we're going to be able to upload our mind to the cloud. Okay, no idea about soul or whatever, but you'll be able to upload your mind to the cloud, which means the moment you can do that, you'll be digitally immortal. Your body can die, you can die in a car crash, and you simply download yourself into another vessel, whether it's a car, a robot, or I don't know, whatever. A robot goldfish, who cares? So I'm approaching life with that in mind, that is an inevitability. So if I'm going to live, or some version of me, for hundreds of years, I will be trading till the day I die, or digi-die, I don't know. I'll be trading for hundreds of years, and I'll be in business for hundreds of years. So that enabled me to chill the hell out, because I was going hell for leather in business, thinking, I need to make $1 billion in 2 minutes flat or whatever. So the reason I have this enabler group is that my long-term goal with that is to have a marketing company, an accounting firm, law firm, an insolvency practitioner firm, a tech research R&D firm, marketing/services. I'm not sure if I just said that one. A graphic design also comes with that. Another tech firm, which is mainly coding, because I want to be able to create digital stuff. Infrastructure company, so that will be, and that's a mini group in itself, the infrastructure company. So it'll be a building company, scaffolding, 3D construction printing company, etc., etc. So when you have this group of about 10 companies, there is nothing you can't do. You can do anything with that enabler group, and so that then also acts as a positive flywheel for your future acquisitions. Because if I then go and buy any business, I simply parachute my enabler group in. And then, hey presto, I can then just be the puppeteer and not have any, I'll be like, I want to buy this business. I go and do the deal, close it, buy the business, and then hand it off to my enabler group, which I'll have fully capable people to, follow through with the acquisition, etc.
But I guess to be fair, you've arrived at that analysis really coming off the back of a fairly challenging experience when you first decided to go beyond running Realistic Trader and start building a portfolio of M&A companies. So let's just wind the clock back to that. Why did you've got this nice profitable Realistic Trader business going on. Why did you feel the need to go out and start buying 16 other companies?
Well, I always go head first into everything, because you have to walk the walk, and I see everything as like a learning experience. So I see a lot of people bitching and whining on Facebook, going, "Oh, I've just done this in business, or someone's hurt me, or screwed me over in business, or whatever." And that's cool, but you got to treat it as a learning point. Like if you were to write a massive list of all the trials and tribulations Elon Musk has gone through, or any billionaire for that matter, and then compare it to yourself, well, your list isn't going to even. It's going to be so small, it's ridiculous. So I actually find, as I showed you just before this chat, I've got a little list here of all of the errors or hiccups that have hit me. I see these as my rite of passage. So my goal is to gobble up as many errors and F-ups as I can, because you then are a person that can overcome these things. So for example, I'm going through something right now where my business partner of a business is stealing 500 grand from me. Literally, I'm having to go legal. And it's like, if I had this hit situation even 5 years ago, that would have hit me for 6 mentally. And then I would have, my whole life would have just like crumbled and gone, oh my God, woe is me. But now I'm like, right, bring it, game on. And also, it takes very little of my attention. So the problem where most business owners face is that an issue arrives, and then it's their life. Whether it's a month ordeal or a year ordeal, they won't do anything but think, eat, sleep that problem, and it will mentally, skewer them mentally, financially, and relationships as well. So you have to learn how to go with the flow. And if there is a big issue, I guess coping with hiccups is, I think, a very, very valuable skill. So it doesn't, devour you.
No, but
so
in terms
I'm
of,
going to have a very
so just coming back to you started acquiring businesses, and when you look back on it from now, you said you'd gone through this massive process with the samurai to get rid of these companies. What do you think, looking back, were the kind of mistakes that you made going in that you wouldn't make now, having learned these lessons?
Oh, for sure. So it was around 2014, 2015, where there was the beginning of all the online marketing of, hey, jump into business, no experience needed. Instead of setting up a business the long, hard way, just jump in at the last minute, where it's already set up. And I mean, I was already in business, so I wasn't a total noob. But the problem that I see facing, and it's actually, it helps, experienced business owners, that you have this massive flood of people trying to buy no money down businesses with zero business experience. And guess what? Every single person I know that's had zero business experience that's gone into M&A has ended up on their ass, because they've bought into a business. So what's normally happened is they've gone and borrowed a silly amount of money for their capabilities, bought the business, or they've done a no money down deal business, and then the business goes to pop. And then it's people like me that come in and hoover it up.
Yeah.
Again, no money down. But so it's like buying a helicopter and you've never had a helicopter lesson in your life. That is literally how crazy it is. Like, do you know anything about sales, marketing, managing a team? Not just managing a team, like hiring, recruiting, firing, cultivating, keeping the motivation. I mean, I could talk for hours just on staff. How to fire someone, how to make someone redundant, getting people and also getting rid of people is a skill in itself. Getting rid of people is even harder these days.
Yeah, absolutely. And I mean, I know my own experience with transitioning from the corporate world, where even fairly high up the ladder, you are insulated from so many aspects of actually running a business day to day. It's only when it's suddenly you are it, and it's your money that's on the line. It's a very different feeling, isn't it?
Yeah, and I think so. The first M&A error I did was thinking that RT, so the real estate trader, was a fully autonomous business when it wasn't. So in essence, it was a spinning plate, and I had to keep on spinning it. So the first learning point here is, do not go into M&A until your main business is making a minimum, absolute minimum of 20K net per month. So let's say 250 grand a year minimum net profit. That's after tax, or EBITDA. After the depreciation amortization, and it's fully managed by a general manager. Only then move your attention elsewhere. So that's the first lesson. The second lesson is, don't buy too many. So originally I was industry agnostic. So I didn't care about, what type of business I bought. I mean, hell, I bought Hudson and Middleton's, which was the UK's oldest and biggest pottery manufacturer. These huge factories in Stoke. It had the Royal Seal, produced, all the chinaware for the palaces and all that sort of stuff. And then, we didn't run it into the ground. It was already going into the ground. But I had no business dealing with pottery. I know nothing about pottery. I still don't know how to make a teapot. Clay and some hot kiln somewhere, And so I thought, I was slightly arrogant, and I thought I could buy a business in any industry and then make it work. But you do need to know some sort of nuances. So yeah, buying a business within your own ecosystem or your congruent to your empire does help. So, I'm pretty good at training and training companies, I guess. So I can easily buy a training company now and whip that around because I know all of the pitfalls with that sector, let's say. So yeah, keep it congruent. Also, I've found cross-utilization of staff is another really handy thing. So I've got a core team of staff now, that manage all 3 businesses. Done. So, which is great. So, in fact, you see, like sitting here today, it was May 2022. Of those 3 businesses, I've now just got 2 staff. It's amazing.
Wow.
I cannot stress. So, if we go back a year, so when I had about 15 businesses in the whole group, I had about 120 staff. And then, yeah, so for the last, I guess, 5 years, I've been around sort of 80 to 100 staff. And that is just a pain in the ass. The PAYNI every month is just obscene in itself. It's just bleeding. And it's a whole, 80-20. We've all heard of that. But now, because I've whittled everything down, I have 2 members of staff. So 2 guys who are shit hot and they run 3 businesses for me. And I'm completely autonomous with 2 of them pretty much.
Wow.
And there's one business where, yeah. So cross utilization of staff is really, really handy. And then, here's the other thing. Every time you buy a new business, no matter how standoff you want to be, there will always be at least 6 points of contact. So you'll have so I do everything with WhatsApp. So like when I'm dealing with a new business or whatever, I refuse to do email. I hate email. I have everything in WhatsApp because at one point I was being drowned with every different sort of way to contact me. And so, but let's say it's all on WhatsApp. A new business, you'll have 6 points. So you'll be chatting with the director. You'll be chatting with the COO. You'll be chatting with the CTO, the CSO. Like there'll be at least 6 people in that business that will have a direct point of contact with you. And so that's 6 people. That's fine if you just gone out and bought one business. But if you go out and buy 10 businesses, all of a sudden you've got 60 people harassing you every single day. Or not harassing, they're asking questions. And so I spent my whole life just on WhatsApp, just replying to messages. And then people, they didn't understand the context because I didn't explain it. And they're like, oh, Simon's really short on his messages. But like they'll explain blah, 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 blah. Should I do this or this? And I'm like, yep, go. I'd reply with a 2-word reply. And they'll be like, oh. But it's because I was just clogged in messages.
Yeah.
So
I think again, some of the lessons there are really powerful for people to take on board. But I would imagine now, having gone through this process, you've learned the lessons, you've narrowed back down into the fields that you really want to be in. You've retained a small number of key staff. So I guess that's given you more time to focus on the things that really matter to you. And I'm guessing that's kind of the whole crypto trading area.
Yeah, and that's where the growth is. So our new business is like my new growth business, and again, we have no staff for that one. It's just me and a business partner. So we've gone 50-50 on that business, which again is not a good thing to do. But I've always said never, ever, 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 ever go into business 50-50 equal split. And then here's me.
Who gets the casting vote?
Yeah, so the caveat, and we've both my business partner is a top guy, and we both say, we have no filters, right? If I think it, I'll say it. If he thinks it, yeah. So we're not pussyfooting around each other. And the key thing with a 50-50 business is the shag. So you have to make sure that shareholders agreement is tip top. And what you should have to avoid director or company deadlock, i.e. where there's an issue and both directors disagree, normally with company deadlock, you have to liquidate the business if you can't move forward on an issue. So the way to avoid that is you have, in your shag, you have areas of accountability. So if you map it out, it's like a hierarchy of a business, but it's like like big spheres of accountability. So I act as a CEO. So that's my sphere. Well, actually, yeah. So let's make it simpler. So he's the UK's leading crypto accountant, right? And so anything trading related, I have full and final say. That is my area of the business. It's my bag. When it comes down to sort of the crypto accounting or the client and also client management, that's his say. Any of the treasury stuff is my say. All that sort of stuff. So we've got a whole bunch of spheres of accountability. Of course, we agree. We discuss everything, and 99% of the time we're like, yep. We're fully synced up. In fact, we haven't had an issue yet, but there will be down the line. It's just just like when you marry someone, man and wife that get married, everything's hunky dory on honeymoon. You've got to be an idiot to think that married couple will not have issues down the line. So yeah, that we will have issues with Steve and I, but because we've basically drawn a big line in the sand, we both know how to act. How are we going to deal with each other, deal with conflict, even whilst it's now rosy and booming. And that is when you need to be really strict, because what happens with partnerships is that during the boom time, it's like, oh, yeah, I'm making loads of money. This is great. Hair on fire is great. When the bad times come, it's like, oh, okay. And then if you've got a ship with loads of holes, that ship's going to sink. So we feel like we're in a rocket that's taking off. We've just gone past the Kármán line, or we're about to get past the Kármán line, and we need to plug all the holes in the rocket before we get into space.
Tell us a little bit about, because it's quite a radical and creative idea for business. This is the golden geese business, isn't it? Tell me a little bit about how that works.
Yeah, so literally every single day I'm contacted by someone saying, hey, can you just I've lost all my money in crypto with the crash or whatever. Can I just give you my money and trade it? And my answer always is no, because it's illegal. I cannot manage other funds. But then I thought there must be a legal workaround. And long story short, we've incorporated my M&A knowledge with crypto. So what happens is that we sell these eggs, basically, which is a limited company. So we set up a limited company. We inject a bunch of crypto in it, and we have different size of eggs, but an egg will chuck out expect a certain amount of profit every year. And so someone can effectively come in and buy an egg, and they will have this very pessimistic expected profit every year. It's not a fund, so there's no guarantee that you'll hit the profits. But with my track record, etc., like I've made these figures very pessimistic. Because what we found in crypto is that 3 to 4 months of a bull market normally generates 1 to 3 years worth of profits. So so typically when they're buying this egg, it's 50% upfront, 50% deferred over 3 years. There is a maintenance fee, etc. But that egg, so the only OPEX per month for that egg is the maintenance fee every month and the deferred payments. But if the egg doesn't make its expected monthly profits, those payments are paused. So the deferred payment we earn nothing if your egg is not making profit. So, and in a market like this where cryptos are crashing and whatnot, what we do is, all the cash is just sat in stable coins. Where I literally do not own a single crypto, and I haven't for ages. So since January, I've seen that this crash was happening, and so we sold all of our cryptos. So what I've just been doing is trading, and so obviously all the trading profits I'm getting is making all the eggs.
And what many people perhaps don't realize is that as a trader, you also make money when the market goes down, because you can effectively short things going down.
Yeah, it's beautiful. Like typically, a falling market moves 3.3 times faster than a rising market, and a crashing market moves 20 times faster than a rising market. So you can, if, like, for example, if you take the crash, so from Bitcoin moving from 37K down to 30K, the golden geese pot, so to speak, made just under £1 million. just in that small move alone. So we had, so to put things into perspective, 75% of the pot was sat there in stable coins or cash doing nothing. 25% was sat there doing active trading, shorting and whatnot, which is great. So the trading element really, well, at worst, it will just numb the losses if there are any. But actually we're making profit in this bear market.
Mm-hmm.
But when the bull market resumes, not only can we put that 75% of the pot back into cryptos, which will then start making profits as crypto assets go back up, the trading will be like a supercharger and be even more. So yeah, but yeah, no, it's good. So in terms of of that business, yeah, the Golden Geese makes a nice healthy margin up front. So of that 50% payment that comes up front when they buy the egg, we keep 20%, and 80% goes back into your egg.
Okay,
So,
and I think the other thing that we want to talk about is your other business, because one of the things that I think we've shared over the more than 10 years now, I think, that we've known each other, is a kind of mission for financial education, and you very much kind of implemented that through your Wealth Action Plan, or the WAP as it's called. So tell me a little bit about that, both the motivation for doing it and how you've actually delivered it.
Yeah, so this was a bit sad. So in 2018, I had like an absolute terrible year. Loads of friends around me who were dying. I had a couple of friends that went bankrupt, and I was like, oh Jesus, everyone around me is just crumbling to pot here. And I had a real morality issue, and I thought, I had a 2-year-old son, had a newborn, was born in March 2018. I was like, oh my god, if I die, none of my kids will know anything that I've gone through, And so I sat down for 6 months, 6 or 9 months, can't remember, probably 9 months actually, and wrote out 450,000 words. So that's 8 books worth of content. Literally just sat there in my office and on a Microsoft Excel thing. So every lesson was a tab on this Excel spreadsheet, and there was hundreds of tabs, and they're like, why do you do this in Excel and not Word? And anyway, so I wrote out, literally I downloaded everything I knew about business, investing, money, and then got someone to convert all of that into 10-minute animated videos. So that's what the WAP is. And the WAP's actually been a really good learning point in itself, because the original business plan of the WAP was to be a low price, high volume, high margin business. So, £10 per month, and then get 100,000, a million users. That was the original plan for the WAP. And now, in hindsight, it didn't play out at all. In fact, it was a massive failure on that front. So it was a massive win that we now have this massive encyclopedia of business, M&A knowledge, money knowledge, like everything, to the point where in my will, my kids will be forced they won't be able to access any of the trust. It's weird. I'm not a big fan of trust fund babies or whatever, but I now have a trust fund for my kids. But it's weird. But they will not be the typical trust fund baby. My wife doesn't like it, but I've set certain hurdles. So the kids won't have access to any of the money until they've hit certain targets. So one is to consume the whole of the WAP. Two, there's going to be a lot of money in that trust by the time I'm dead or whatever, and they come of age. So they'll have to prove themselves. If they want to have access to it, they'll have to have set up a business that's hit 1 million EBITDA.
Wow.
From scratch, not just buy it. Like, I don't want, like most trust fund babies, they don't know what to do with it. Like lottery winners.
I know. They're so entitled as well. And oh boy, that would be such a cool thing to put in your will, to say you've got to build a £1 million business before you inherit. That's pretty cool.
Yeah, no, £1 million profit business. Anyone can do £1 million business. You just get someone to invest, buy 1%, one share of the business for, what was it, 10K?
Yeah.
Then all of a sudden, business valuations in itself are absolute poppycock, as you know.
So are you still able to grow and monetize the WAP, or what's its current sort of status?
Yeah. So that's been a lovely learning point. So my original plan failed miserably, and this is where it actually helps to be a practitioner in business yourself, right? So because I got good at Facebook marketing and marketing in general, I understand the marketing landscape. And one of the reasons the WAP didn't take off so well is, one, the positioning and message just wasn't correct. Because I'm never like, all my stuff is never, become a millionaire in 2 minutes flat or any of that sort of sizzle. And it's quite, plain English speaking. It hasn't got the razzmatazz as a lot of other people do. Also, I'm not promising anything. It's like it's like a business degree, except you're not going to be 50 grand in debt and you'll actually learn something useful, unlike a MBA. But especially since sort of 2019 onwards, the marketing landscape has shifted to the point where CPA, so cost per acquisition, as in how much it costs you to buy a new customer, has gone up ridiculously, especially with Apple iOS change, where Apple, stopping Facebook from tracking Apple user data, so to speak. Android is now about to do something very similar. So all that's happened since really 2020 is the cost of marketing has rocketed up. And therefore, what a lot of people haven't cottoned onto yet is that if you have a business model that isn't congruent with rising CPA, you're going to die. And that's what the WAP was. It was, a low price, £7 a month or £10 a month, hoping to get loads and loads of customers. But as costs were going up, it was costing me between 150 to 250 pounds to buy a new WAPper. So to get someone in to come in and pay me £10 a month.
Ouch.
And I was like, yeah, ouch. Because then all of a sudden, then you're into the next metric. The next metric is, okay, how long is this person going to stay with us for? What's the client churn? What's the monthly churn? What's the annual churn, etc. And then ultimately, what is your LTV, your lifetime value per client? And I realized, oh shit, this business is dead as a duck, because the churn wasn't good. Well, it wasn't good for me. So that is. So churn was high. So I then realized I had to do a whole bunch of CRO, so conversion rate optimization, to make the landing site slightly better. I then had to look at the UI deeply, and I realized that the portal that we're displaying all this info was not good, hence why people were leaving after about 6 months. We found there was a black hole in the learning. They did like 4 or 5 modules and then just buggered off. I was like, what's causing this black hole? And I realized there was like 2 videos that I've completely forgot. And it was also an error on the web designer's fault. But ultimately, I'm the director. It's my fault. The last 2 videos, like, right, that's it for the WAP. Hope you learned everything and have a good life. Bye. Pretty much. And these 2 videos were like in the first quarter of the. I was like, whoa, Jesus Christ! So that was my error. There's like hundreds of hours worth of content. I didn't have time to go through it all. Anyway, we found it. So those 2 videos now at the end. We've turned it more into like a Netflix of learning. So you can actually, it was one line of learning originally. Now you can go all over the place to different modules. So here's the biggest learning point for any business owner out there right now. CPA is only going to increase. Customers, as in the general audience, the public, we are all pissed off with marketing, really, and adverts. Any like pop-up, we're like, click away. If there's an advert in a video you're watching, oh, God's sake, and you'll probably do something else, look at your phone for a bit, and then come back 10 seconds later so you can skip the ad or whatever. So that is only going to continue. So if you have a low price, high volume business, I think you're screwed. You're absolutely buggered. So you have to pivot. You have to just flip it on its head. You need a high price, low volume, high margin business. That's like, and to the point where it's so high price and so low volume that, it doesn't matter. You don't care. So I don't care now. So like, let's take Golden Geese, for example. We don't do any marketing. I don't think we will. But if we were to, like on average, when we sell an egg, that we make 30K profit up front, and then if let's say that egg does exactly what we say, and we make the egg owners very profitable as well. I mean that egg will be chucking out about $9,000 a month every month for 3 years. So it's very, very profitable for us as a company, and also for the egg holder, which is the most important thing. And so if we were to, turn to Facebook ads on for golden geese, etc., I don't care if it's costing us £1,000, £2,000 or £10,000, because the margins are there. Hell, we could spend 30 grand to find a new egg buyer, and it's still.
And where are you finding them? Is this a cross sell from realistic trader clients?
No, so I purposely didn't want to cross-populate audiences, because RT is all about, hey, learn how to do it yourself, because you need, like, I always bet on myself, and that's because I've got my skills and the knowledge, and I want other people to be able to bet on themselves as well. And so golden geese was for the opposite type of people. But ironically, and I never saw this coming, every golden geese egg holder is an RT member.
Interesting. But don't you think isn't that just because they already know, like, and trust you? Because there has to be an element of trust in your ability to produce the trading results that will drive these profits.
Yeah. So what we found, and this is a very sore topic for me. Also emotional. We recently did a big study or analysis of all the traders that we're still in contact with from 2013 till now, and we've taught thousands of people. Not a single trading student has surpassed me as a trader, and that really hurts. To the point where, when you think about this analytically, you're going, oh shit, Siam, you're a rubbish teacher. That's the first thing I thought. And I was like, oh wow, how has no student beaten me in terms of money and also percentages? And I thought, what is going on here? Why? And I spent a good year mulling on this topic. And it turns out, I think, just really chatting with past members and whatever, is that all students, they sort of fell into the same sort of several pitfalls. And with trading, you cannot become a good trader unless you throw your whole life into it. Unless you become a full-time trader and that you're obsessed with the markets, and that staring at screens and isn't a chore. But for most people that get into trading, it's like they got a job, they got a business, whatever, and they thought, I want to learn to trade as a side hobby. And you can, but if you treat things like anything like a hobby, you'll get hobby-like results. Treat anything like a business, you get business-like results. So I treat my trading as me, stalking the market and then pouncing on opportunities. It's a business. So that's one reason. Two, they haven't, I've been trading for 19 years now. They haven't gone through the first 7 years of pain I had to go through. So maybe it's a case where maybe I'm analyzing my past performance, my students, too soon. Maybe now the earlier students have had their 5 years of pain or 10 years of pain, and now they're finally going to get good. Now, I'm not saying there aren't any good traders. There's loads. Off the top of my head, there's about, at least 30 current students, who are absolutely killing it right now. Killing it, which is great. But, yeah, and so I think the reason Golden Geese people are RT members is because they're like, oh shit, I don't have time to trade like Siam does. Like, a lot of my trades are at 1 a.m. And so, if you were to copy every single trade I've done without missing any, you'd be in quite some nice profits right now. But what happens, and unfortunately, there's one poor soul who obviously missed out on loads of trades because he was asleep or at work, and every trade he did place was one of my losing trades. So there was me, in profit with a nice hit rate, and there's him with net, no positive trades, and and so I think that's probably one of the reasons people join
Okay.
Golden
Well, I
Peaks.
mean, it's great to know that in a sense you've got both sides covered. You've got the kind of done for you and the done with you, so people can kind of take their choice of that. And I think there's been some really powerful lessons there. And I absolutely agree with you that high price, high margin businesses have got to be the way forward. And being properly financially educated, because the other problem I see with a lot of business owners is they're actually quite successful in building a business, but they never adopt
Yeah,
this mindset that the business should really be a driver of their investment portfolio alongside it, so that they're eventually independent of the business because they haven't got the financial education.
yes, and that's such a critical point. I see businesses as an enabler for wealth generation, but it is not wealth generation in itself. Well, I guess it is. You can get filthily rich with just doing business. You don't even need to dick about with M&A or trading but you can do very well in business. I know many people. One of the richest people I know has literally just done one business for 30 years. He's never traded. He's never invested. He doesn't even know if he has a pension, but he runs a business, some like 100 mil rev business with at least 20% net margin. He's milking it. So obviously there's loads of people like that. But the way that I like to intertwine activities. So one of my trading methods, which a lot of people can't do because it's a resource thing, is I like to take massive swings at low risk, high probability outcome plays. So anything with high R multiple, so high risk to reward. So for example, if you were to risk £100 on a trade and the net profit would be £100, that's called 1R. If you were to risk 100 quid on something and you were to make £1,000, that's a 10R trade. Well, I've got a rule personally. If I ever see anything which is 20R or more, and it's relatively low risk and relatively high probability, I will swing for the hills. So if 20 Rs, you risk 100 quid, but you could make £2,000. Or you risk £1 million, but you could make £20 million. I will swing for the hills. Now, when I swing, at the moment, or historically, I've only put sort of like 200 grand in. No, 100 to 200k. So, in fact, the last swing I put 100 grand into this particular thing, and it hit, but it didn't hit the full potential. So that 100k turned into 600k, which is good, but it was only 6R. It wasn't the 20R I was expecting. I pulled out early. Now, if, let's say, magic wand, you had a business or 2 or 5 which are constantly replenishing your purse, guess what? You can take more swings. So one of the things that you should ask yourself in trading, or I guess in business as well, is, okay, how can I increase the size of my wins? And how can I increase the frequency of my wins? So I'm obsessed with increasing frequency and increasing amplitude. The way that you can increase, so the frequency, yeah, that's pretty much set. With those big swings, I've probably got a 20 to 30% hit rate. So I will lose a lot. I will lose, 7 times out of 10. But I only need 1 out of 20 swings to make it work. And so probably once a year I connect. So I hit target once a year with one of these big swings, and it's like, sweet, it's like, and it'll generate 10, 20 years worth of profits in one hit. So in terms of amplitude, how do I increase the amplitude of these wins? Well, if you have businesses that are constantly chucking out profits, it enables you to swing faster, harder, and more frequently. So now I'm trying to gear up so that my swings, I can throw 250 grand at something each month. That's what I'm working towards. So I know that if I can have 12 swings a year, one of them is going to hit. And that 250k should hopefully turn into several mil. But I'm trying to get my businesses and my profit buffer to the point where I can effectively prepare to blow 3 mil a year, hoping to make way more.
Okay,
But,
well, I think unfortunately the clock is against us, Simon. I think we could talk about
sorry.
this stuff for hours, but some fascinating insights there, both into building businesses and into the world of trading and investing. So all I can say now is, Siam, thank you very much for joining us today and sharing those lessons with us.
Oh, thanks for having me. Sorry if I waffled on.
No, there's some great stuff in there. I think, folks, you should listen to this one 2 or 3 times. There's so much to unpack from it. So thanks again, Siam, and good luck with your various ventures.
Cheers, Graham. Thanks for having me.
If you'd like to suggest topics for future episodes, appear as a guest on the show, or invite me onto your podcast, you can get me on graham@grahamrowan.com. Thanks for listening, and I'll see you next time on Grow My Business or Sell It.